I think, I'm somewhat on the same page as Mark. There is a reason to be optimistic with this market. And, there are definitely holes and places in the market that investors can find alpha. And some of those places are technology and semiconductors, for example, that continue to soar regardless of the trade tariffs. There's a pullback in those sectors, but they're still sort of hanging on. And I think that, a lot of the data around the world could potentially soften out if central banks continue to support markets around the globe. We heard news about Germany and France essentially infusing capital into the markets. We have it happening in China. We saw, India with the $20 billion infusion of capital. The U.S. is supportive with the Fed, lowering rates and essentially inserting liquidity into the market. So I think that, there's sort of a lot of bad news and volatility, but there are still some bright spots, and it looks like the bull market is at least continuing to hang on.
It's interesting that you mentioned semiconductors because they are doing quite well today, and they tend to do well when the trade tensions thaw. They're up 40% from the lows. So you still think there's room to run there?
I do. So if you look at a name like Micron, it's up close to 60%. We've actually got a short-term semiconductor ETF that's up 100% year to date. But if you look at some single stock names like Micron, for example, you have gaming growing, you have data centers growing. They've essentially been able to reduce some of their inventory for PC memory. They have the NAND memory for the smartphones, which will be a huge growth space if the growth in 5G continues, and particularly if we get a resolution with the trade war. So even if there's no resolution, you're going to have 5G in America, and it's going to be 20 times faster, so you need more memory. Throw China in there and an agreement in there, and all of a sudden you have the ability for some global growth to hit that stock. And then, some other names like Broadcom, Qualcomm, I think that those are a little more trade war dependent. They're the biggest sort of chip suppliers to China. They could grow if we get an agreement there.
Mark, where do you stand on those names, the semis?
So Broadcom we own. I like Broadcom. It's kind of like my anti-semi because they do have some good software exposure. So right now we prefer software over semis. It's just kind of a more defensive play for us. So we own Broadcom, also NVIDIA as well. NVIDIA is more of our growth semi. Gives us access to all of those highest growth end markets that we want to play, whether it's autonomous vehicles, data center, gaming, AI, so those would be our two favorite picks.
Sylvia, just wanted to ask you what you do in the short term with energy exposure, which has had a bit of a pop because of geopolitical concerns. Is that time to take profits, or you think that can continue?
I think that can continue, but the key word is short term. So the oil supply fell from about 9.8 to 5.7, so it's close to a 50% drop. And we keep hearing news that the Saudis will essentially restore the oil supply, but it hasn't happened yet. So in the short term, we have seen some, great performance out of energy-related, gas-related, gas and oil-related ETFs. And again, I think my outlook for that is the next week or so. I wouldn't hold that into year-end because that probably will resolve itself.
I guess the common thread here, semis, technology, and robotics, I mean, they've all got secular growth stories, but if we do see a turn in the cycle, aren't those vulnerable areas where money has flowed into?
I think they're vulnerable areas because they are sort of growth and momentum stocks. But, as Mark said, there are bright spots. Software is a bright spot. If you look at, you have to sort of pick your names, like Microsoft and Apple and technology. Microsoft, $40 billion repurchase, 11% dividend, Apple streaming services. Some of these names are bright lights and they continue to grow. And I also just love the story of robotics, AI, and the millennial trade. I think we're going to continue to see AI and robotics grow in healthcare, in factories, in manufacturing, globally in Japan and China. Gaming is supposed to increase about 150 billion in the next 4 or 5 years globally. So I do think that there is a chance that those names keep going. But investors overall should diversify their portfolios, make sure they're allocating to some of the late cycle performers as well and some of the defensive names as well to sort of, temper volatility in the markets.